Good morning to everyone. And first of all, congratulations to the Quants League team. They have organized such a great online event. I'm sure that many budding traders, even experienced traders, are getting a lot of takeaways from this session, this version of the session of Quants League. Saying that, I would straight away like to go to my PPT. Just let me share the screen. Let me just confirm if my screen is visible and my audio is clear. Can someone
Absolutely,
confirm?
sir. Yes to both.
Okay, then let me start this thing. Yes. Friends, see, today I would like to discuss about a strategy. More importantly, not the strategy, but I would like to discuss about how to build a strategy from scratch. We all get an idea. See, all the like, even if you are 1 year, 2 year experienced into the market, we tend to get many ideas, but we drop them because we don't know how to handle them, how to like nurture them. Like idea is like a baby, and we need to let the idea grow, and the full adult version of the idea will be the executed orders in your broker. My effort today is to explain how an idea can be converted into a fully grown strategy, and how my thought process will be like in building an idea to a strategy. Before that, going ahead, this is just a brief introduction about myself, because many people know me as Python trader, and my name is Saddam. I work in a bank. I'm a part-time trader, and I'm trading FNO since 2018. And all my systems are 100% rule based. Because of my day job, I don't get enough screen time, so I have moved to algos. And to be clear, I am not a developer. I have never written a single line of code in my entire trading career, but I use algos to run all my systems. Here, I want to tell one point to the people, to the viewers who are not from the coding background. I want to tell that you need not write code, you need not be a developer. Yes, being a developer definitely will give you an edge. The future is there. But what I'm telling is the non-developers will are also in that future along with the developers. Here the process, here the thing is like, it's not about the code, it's not about the strategy, but it's about the process. Who religiously follows the process, who enjoys the process, can triumph in the long run. That's what I just wanted to tell you. Saying this, I would like to go ahead. See, I am in the social media perspective, I am from a Twitter background. In the Twitter, we like coolly call it as spin tweets. Thing which we like, two words which I hear like most of the times is strategy and algo. Especially new traders or like newly budding traders, they feel that if I get the strategy of so and so X person who is earning in say like 7 or 8 digits, I will be profitable. Else, if you are having a strategy and if you want to like automate it and just forget it, you are thinking that are yaar kaam ban gaya, like we that is enough karke. But what I am telling is, though these two things are nowhere near to the word holy grail, nothing of these two is holy grail. What is holy grail according to me? The holy grail according to me is the process, and the love for the process is the holy grail, and that love for a process has brought me till this point. So I would always say that don't look for any strategies or algos, but try to love the process and keep it going. You will definitely reach where you want to be. Saying that, like we in this session, we would like to start with few questions, and in the journey of this session, we would like to answer one by one, directly or indirectly. So many beginners, or like everyone, not only beginners, any trader, few like questions in everyone's mind is like, is it so difficult to build a strategy? Nowadays everyone is like going for the ready-made strategies, everything, but that doesn't give you an edge, because you can borrow a strategy but not the conviction, which is widely said in the trading arena. Okay, is it really that difficult to build a strategy? No, according to me, it is not difficult to build a strategy. We'll see how we'll do that in another couple of minutes. And second thing is like, are the good strategies built only by pro traders? Or let me put this question in another way. But suppose a pro trader who is like earning in 7 to 8 9 digits even, if he comes and pens down his strategy to the minute detail possible and writes it and give it to you for free, will you be able to make money out of it? Absolutely no, baby. Absolutely no. Reason is, the strategy is for his psychology and his capital. Here, the point I want to stress upon is, you should build your own strategy for which suits your psychology and your capital. That is your duty. So we, in this course, we will try to take a basic idea and try to build a strategy from here. And the last question I like many people are asking is, can we survive in the trading if we don't know how to code? The answer is in front of you. I am a person from non-technical background. I don't know how to code even a single line of any of the programming languages. Still, I am using Python code like almost over an year now, 1.5 years. I'm using fully automated Python codes which are deployed on AWS cloud. I'm completely using the automated version of these things without knowing a single line, without writing a single line of code. If I can do it, you can definitely do it. So saying that, in this session, we will be learning an expiry day strategy. More importantly, my request to all the viewers is not to concentrate on the strategy, but to concentrate on the process in which, the step-by-step process in which I am about to tell you, so that you can build your own strategies. Okay, this is the roadmap of me. Like my ideas, or like Python traders ideas, will go through this process. Each and every strategy I have built will go through all this process. Every time the strategy will start with a small idea. The idea can be random. Idea comes out of a discussion with a friend, with a well-wisher, with a mentor, anyone. The idea comes out of anywhere. It can come out of anywhere. Once you get the idea, go to your laptop, open your charts, sit, spend hours and hours of time on charts, and try to define some rules. Those rules can be right, wrong, blunders also sometimes. Okay, but define some rules. Once you define those rules, start backtesting it. Backtesting it manually. I am stressing the word backtest it manually. Though I have privilege of getting it backtested with like Python and all, I still prefer initial backtesting should be done manually using charts with the naked eyes, which gives you the perception and the confidence. Once you backtest it, definitely you will find some mistakes or necessity for changing some rules and all. Once you go to that process, then redefine the rules. Again backtest, again redefine, again backtest, again redefine. Keep on doing that. All the hustling should be done before starting the live trading. Once you start the live trading, there is no looking back. You have to like leave the system and trade the system for at least 1 year. 12 months is the minimum time to judge any system. Whatever hustling you want to do, whatever changes you want to do, everything should be done before starting the live. Okay, once all the rules are defined and redefined, everything is ready, then I will prepare a flowchart. Flowchart, we will see how I prepare a flowchart, a basic flowchart. I don't use any complicated words, any complicated stuff, any complicated indicators in my strategies. Once I prepare the flowchart, I give the flowchart and all the rules pen down to the smallest detail possible, and I will give it to my developer, who is my friend too. And the last two things which are written here are taken care by my friend and developer Ashish. He will be addressing this session at the end also. No need to worry. We will get it coded and we will automate it through cloud. This is the journey of every strategy I have built. Okay, let us now take like like basic of the basic idea, and we shall build an expiry strategy around it. We'll see how things can be done from here. See, the idea is, see, how many of you here know on an expiry day OTMC and OTMP becomes zero? Everyone, right? Everyone who is listening, or everyone who just started FNO trading, or anyone who has just started option selling, they know one thing: ki expiry day pe OTMP and OTMC becomes zero. This is the idea. This is the base idea, and all my strategies are built on such a basic ideas only. I don't use any complicated stuff. This is the basic idea. And now we will see, we know OTMP and OTMC will become zero. So what are all the options we have to trade? Second question. The second question is, what are all the options we have to trade? The simple answer to that is strangles. We can trade strangles. We'll sell a call, we sell a put. If the market expires between those two strikes, both the strikes will become zero and we'll get profit, which is only 2% of the times, which happens only 2% of the times. So now see, when I tell about strangles, what are all the types of strangles we have? There are hundreds of names to the strangles, but I categorize all the strangles into three parts, which is bullish strangle, bearish strangle, and a neutral strangle. Okay, you can give any number of names to this, but all the strangles will break down to one of these three categories. Okay, I myself personally, like psychologically, I'm comfortable trading. Excuse me, I'm comfortable trading slightly directional. I'm not a complete directional player, out and out directional player, but in my trades, I would like to take a directional bias, because having the directional bias will give you a good risk to reward. Okay, so out of these three, the neutral strangle is out of question for me now. So I'm left with two options: a bullish strangle and a bearish strangle. Let us just define the textbook definition of what is a bullish strangle and bearish strangle. In a bullish strangle, we'll be just selling an at the money put and an OTM call. And in a bearish strangle, we'll be selling an at the money call and a OTM put. Okay, this is the idea. Now the second step is defining the rules. Okay, now see, let us define the rules. We have already committed to take a bullish triangle or a bearish triangle. To define that bullishness or bearishness, we need to get a entry signal, a bullish entry signal and a bearish entry signal. Okay, for that I have, like, I'm again telling you that everything in this session will be like only the basic stuff, and that basic stuff will work in the markets. To define the signal, I am taking two criteria. First criteria is ORB, open range breakout. Again, a pretty basic thing. Open range breakout of a first 30 minutes of the market open, 9:15 to 9:45. Okay. Second thing is the price action. These two are two different signals. I don't combine this. You can take these signals either from ORB or from price action. We'll see how to do that in the coming slides. Okay. And once we get the signal, here I just want to stress upon one more point here. Many people try, when they are trying to generate a signal for the system, they try to generate the perfect signal which works 90 to 100% of the times. I've seen many people trying to generate, they use tens and like number of indicators, they put on everything into the strategy and they try to bring up a signal which works every time. But believe me, friends, there is no signal which works 100% of the time. So there is no point in banging your head around defining a signal. So these are all my signals. That's it. A simple open range breakout, either upside or downside, and a simple price action. When I say price action, there is no complicated patterns involved here. Price action for me is a simple higher high, higher low, and lower high, lower low. That's it. I'll not be using anything else. You will see how I use the systems. Okay, and I am a very big believer of the law of large numbers. So there is no point in like trying to fine tune it to the minute detailed possible. Just leave it to the law of large numbers. Make sure that your entire strategy is having a positive expectancy. That's it. Okay, I have just represented the open range breakout. In this first charting, I have marked the high and low of first 30-minute candle. This is a 30-minute time frame chart. I have marked the high and low of first 30-minute candle. Very simple thing. If there is an upside breakdown, the upside breakout, we will take a bullish triangle. If there is a downside breakdown, we will take a bearish triangle. And similarly, this is a 15-minute chart. I see the higher high, higher lows on a 15-minute chart. You can see I have just marked a simple swing low and a simple swing high. In this chart, it also I have marked a simple swing high and a simple swing low. The first swing high and first swing low on a 15-minute chart, I will be considering only those swing highs and swing lows. And once these levels are like crossed, I will be taking the trade accordingly. We will see a number of examples. So don't worry if you like not able to catch it. See, I just wanted you to understand it much better. See, it is a breakout of price action like swing high. Once the swing high is taken, I will take a bullish breakout is here. So I will take a bullish triangle. I will sell an ATM put here, which is having more premium, and I will sell a OTM call here, which is having less premium. In the similar way, when there is a breakdown or a bearish breakout, I will be taking, I will be selling an at the money call and OTM put. Okay, now again, few of you might having a question key, how far OTM should I go? Because we are talking about expiry day here. Usually the premiums will be less OTM on, I mean, near the OTM, the premiums are less. So how much OTM, how far OTM should we go? Like again, to give a very simple answer, two things I follow again here to choose the far OTM, like OTM strike. Just take half the delta of ATM. If you don't know the delta, if you don't know delta gamma, like you don't know the Greeks of options, no need to worry. You can just select a premium strike, which is having the premium of about 0.3 to 0.5 times the premium of the at the money. At the money, we don't have any issue because we know what is at the money. The nearest rounded 100 strike is an at the money. Once you sell that strike, you can sell another call or another put, which is having 0.3 to 0.5 times the premium of the ATM. That is a simple way of defining OTM. No need to go very far to make sure that that strike becomes zero. That doesn't help you. Don't go too far. Don't come too near. These two rules will help you stay in that optimized region. Okay. Now, suppose a bullish breakout or bearish breakout happened and we have taken a trade. Taking a trade and sitting quietly, praying for the call and put to become zero is not trading. So once we take the trade, the second important step is to manage the trade. To manage the trade, we should know what are the favorable conditions and what are the unfavorable conditions here. Okay. Now see, we all know for a triangle, the favorable conditions are range bound markets, wherein both the call and put will become zero, which comes very less, like market will not give that easy opportunities to you, though once in a while we'll get this opportunity also. But we should be prepared for the unfavorable conditions. There are two unfavorable conditions for triangles. Two of them are trending markets and IV spikes. In another language, I can tell that delta move and an IV spike. For the people who don't know what is the delta move, a trending market like 1,000 points in any direction, upward or downward direction, is like delta move. You can call it as a good delta move. And IV spike is something like the price doesn't move much, but the IV spike and the premiums increase because of some news in the market. Those two things, those two scenarios are unfavorable conditions to the triangles which we have taken, either bullish or bearish. Okay, now we should handle these two scenarios, like trending markets and IV spikes. How can we handle? See, once the market starts to trend or the premium starts to spike, what will happen is the entire triangle premium, the premium of call plus premium of put, the entire triangle premium starts spiking. Once the premium starts spiking, like your M2M starts to go into loss, and we should fix a point wherein we cannot allow further loss to the M2M. Means we should close the strike which is spiking. Among these two, call and put, definitely the triangle is such that if one leg is spiking, other leg will decay. But obviously, the spiking leg will give you more loss than the other leg, which is giving you profit. So first thing is like we should close the strike which is spiking. We'll see how to do it in the next slide. And once we close that strike, we are left with one strike, one leg open. And we should not leave that leg open. We should trail the profit of that leg. On an ideal scenario, this will become zero, but not always. Okay. Saying so, I will go ahead and like these two scenarios to close the strike price and trail the other leg. These 2 points we will address in the next slide. See, how should we decide that the premium of triangle is spiking? We should set an optimal range for that. And for that, I'll be using an indicator. To be very frank, in my entire trading career, I have used only 4 indicators. Those 4 are VWAP, Supertrend, RSI, and CPR. In this strategy, we will be using two out of those four, VWAP and super trend. And coming to the indicators, I prefer not changing the indicators values actually. Like many people try to use super trend 10-2 and think that 10-2 works always. Some people yeah, choose super trend 10-3 and they presume that 10-3 works always. For me, it's like it's not about the value of the indicator that works always. It's the tenure or the duration which you are using it. Like if you use it for a period of say 2 years, 3 years, like everything will pretty much give you almost the same results. 10-2, 10-3, 10-1, everything will give you almost same results. But I usually don't change the indicator values, so I am using the default settings of super trend, which is 10-3. Now the rules for closing the leg which is spiking is, in the strangle, when the I will simply plot a VWAP on this triangle chart. We will see that example. See here. If you see, this is a strangle chart and this is iCharts software. You can get it there. On this triangle chart, I have plotted the VWAP. And the price, till the price is below this VWAP level, I am not bothered. Once this triangle premium comes above this VWAP, if you see, I have marked it here. Once this triangle premium comes above the VWAP, I will close the leg which is spiking. The meaning of spiking here is which is into loss. Okay, the leg whichever is in loss, I will close the leg when the triangle premium comes above the VWAP. Okay, now what to do with the other leg which is left out? Very simple. I will trail the leg. You can see here. This is the leftover leg. I will trail this leftover leg with the super trend with the default setting values of 10-3. In this case, it went to 0. Every time it will not go to 0. If the premium, if the color of the super trend changes or else it gives a bullish breakout here, I will close at whatever price this strike is available at that time. I hope till now everything is clear. If there is any doubts, one or two, I would like to take. If there are no questions, yes, I'll be moving forward. See, if you can see this flow chart, I would like to discuss few things here. We are trying to trade strangles. This is the flow chart which I will give to my developer for designing, then I'll go for it. If you see, this has the entire rules. The flow chart will have the entire rules. See, we are trying to trade strangles. The strangles are either bullish or bearish, and the entry criteria will be either a 30-minute ORB or price action. In the price action, we will take higher highs and higher lows on a 15-minute time frame. And when a bullish signal comes, we will sell a bullish triangle, which is selling an at the money put and OTM call. And when a bearish signal comes, I will sell a bearish triangle, which is selling an at the money call and an OTM put. And after deploying this either or both of these triangles, when the price of that triangle closes above the VWAP, we will just simply close the loss making leg and we will trail the other leg. Here there is spelling mistake. It is 10-3 here. Sorry for that. Simple. This is the basic strategy, and we will see on with some examples to understand it much better. See, before going into the examples, I would like to stress upon the important slide here, which is backtesting. Friends, please remember that backtesting is the most important part of building a strategy. Okay, and there is no replacement for backtesting, like manual backtesting on like chart with naked eyes. I prefer doing it. In the beginning of my trading days, I used to sit hours and hours on backtest, simply just scrolling on the charts with whatever one or two indicators, like keeping what are the values open and taking a book and pen. There is no replacement for that. Even how far the trading might go into algo world and all, there is no replacement for naked chart, like backtesting it on chart with naked eyes. Okay, saying so, if you are a developer who know how to code and all, Python, you like who can use Python and all, you have like many resources and many libraries available. You can backtest using them. Else, if you are not a like developer, you have like below few things which I use personally in my backtesting: Opstra, iCharts, and AlgoTest are few websites I use for backtesting my strategies. You can use them and like backtest it, redefine the rules, and come up with a set of rules which you are satisfied, like which suits your risk profile. Make sure that the drawdowns are not more, like the drawdown should be, there is no optimal limit for how much a drawdown can be, like 10%, 5%, 20%, 30%. It doesn't have any optimal number for that. It is backtest, like it is just the like individual's bearing capacity, loss bearing capacity of an individual. How far you are comfortable is the most important thing when it comes to the backtesting results. I myself personally am comfortable taking around 10%, 12% drawdown, not more than that. If any strategy in my backtest is giving more than 10 to 12% back like drawdown, like I'll be mostly dropping it, or I'll be trying to change, like look for another version of that. I hope I am clear. Let us go and see some examples of what we have discussed till now. See, for the examples, I have not like gone to the chart where it gives profit or anything. I have just simply taken last three expiries. The last latest expiry available is 24, and I've just taken two expiries prior to that. Okay, in this example, while defining the examples, I have taken only price action entries like swing high and swing low, breakouts and breakdowns. But you can go and try the 15-minute, oh sorry, 30-minute open range breakout also. Currently, we are working on the 15-minute open range breakout also. The results are good. That is how we diversify. Once we define the rules, see the actual rules which we have defined is 30-minute open range breakout and a 15 minutes price action. Now we are testing the 15-minute open range breakout and 5-minute price action. See, that is how we like, if you love the process, that's why I told that the holy grail in trading is loving the process. That is the holy grail. If you love the process, you keep digging. When you keep digging, when you keep working towards that, you will definitely get answers to all the questions. You need not ask anyone, you will get the answers. Okay, saying so, let us see how like we have dealt on 24th March, which is the latest expiry, last expiry, wherein the market fell almost like quite a bit and then consolidated for the entire day. Let us see. On a 15-minute chart, I will be marking a swing high and a swing low. See, I have marked a swing high and a swing low. There is a breakout of swing high, but it was a false breakout, but we don't know at that time. But so we have taken a bullish triangle here. Obviously, we have taken a stop loss. After that, there is a breakdown at 11:55 a.m. and obviously that that also given quite a bit of follow up and consolidation. In the next slide, we shall see how we have managed the trade. See. The bullish triangle, the bullish breakout in the chart, you can clearly see that 11:20 a.m. there was a bullish breakout. Okay, 11:20 a.m. there was a bullish breakout, and the at the money price of that that is around 36,000. So we are supposed to take a bullish triangle. Okay, so we have sold 36,000 put and 36,200 call. Okay, 36,000 put and 36,200 call for 169 and 76 rupees respectively. Yes. 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 We have sold 36,000 put and 36,200 call. See, we have already seen in the chart that immediately after taking this trade, market reversed and market has fell. So obviously puts were spiking. See, at 11:50 a.m. the puts were spiking and we have to close the put which we sold at 254 rupees. Okay, we have to close the put at 254 rupees with a loss of around, I'm not able to see the screen. Yeah, with a loss of around 85 points. You can see it clearly here. We have closed the put leg with a loss of 85 points, but luckily the 36,200 call which we sold at 76 rupees has went to zero. We usually close close all our trades at 3 or 3:05 p.m. So we have squared it off at 5 rupees. So resulting in a net 9-point loss in the bullish signal, which we got on 24th of March. See, and we have got another signal at 11:55 a.m. We shall see what happened here. Okay. See, the 11:55 a.m. we have received a bearish signal. We have sold 35,800 call and 35,500 put, and we can clearly see one more point I would like to stress here is, see, we have taken a bearish triangle of 300 points wide. See, 35,800 and 35,500. And after taking the strike, you can clearly see after taking the trade here around 11:50, the market moved 300 points down. the width of our triangle is 300 points and market moved around or slightly more than 300 points. But see, clearly our entry was here. If you can see, the entry was around this point, and in the entire day, the price didn't go above the VWAP. If you for example, if you have taken a neutral triangle, say 200, 300 points up and 300 points down, like if one side the price is spiking, the other side it will not lose that much. But in the bearish triangle, our calls are having more delta, which means the more premium, we are having more premium on this side. So even though the market moved more than 300 points, the price didn't go above the VWAP and it closed in between these two strikes, and both the strikes went to zero. Though we have closed at 3:05 p.m. For slightly lesser amount, we have left some 20 rupees, around 17 to 20 rupees on the table, not an issue. But what I mean to tell is, our width of this triangle is 300 points and market moved more than 300 points. Still, the triangle price didn't go above the VWAP. This is the point you should like note down. Reason why in the beginning of the session, reason why I have stressed that we should like go slightly directional for more risk to reward is, this is the reason. I hope you all got the point why we have done it. And see, in this bearish triangle, we have got a 158 point profit. And in the bullish triangle, we have got some 9 rupees loss. Net, it is a 149 points profit per lot. You can calculate the rest of PNL. That's not a problem, I guess. So saying this, we shall go quickly into the second example. Second example is the slightly bad day for directional triangles. Reason is, you can see in this chart, there is a bullish breakout, we have taken a trade, immediately market reversed, and then there is a bearish breakout, we have taken a trade, immediately market reversed. We got butchered in both the sides. Now we shall see, if both the triangles fail, like both the triangles fail, how much loss are we going to? Because I'm a person who believes, like who trades low risk, low reward kind of strategies. In none of my strategies there will be like bumper profits. There will be no bumper profits in my strategies or my style of trading. I always keep my loss limited. When I keep my loss limited, my profits are also limited. So let us see, in this example, on this day, there was a bullish signal at 11:35. It is clearly written here, 11:35. We got a bullish signal and we have sold 36,600 put, a bullish triangle, 36,600 put and 36,900 call for 181 and 143 rupees. Immediately, within 20 minutes, I think it's around 50 minutes something. Okay, we got an exit on VWAP. I don't know if you are able to see this, but I have traded live. I know the price closed above the VWAP here. I had to exit the put. See, the 181 rupees put which I have sold, I have squared it off at 256 rupees, ending in a 75 point loss. And in the earlier example, once the VWAP, like we got a VWAP exit on the spiking leg, the other leg went to zero and it covered the loss. To our bad luck here, the call reversed and it closed above the super trend. You can see here in this example at around 2:10 p.m. the calls were also spiking. So I had to square off the call at 28 rupees. I sold it at 43 rupees. I have squared it off it at 28 rupees, ending in a profit of 15 points. And in this entire trade, I got a net 50-point loss here. Okay, but we got another signal also, the bearish signal at 12:05 p.m. We shall see what happened in that entry. At 12:05 p.m. we got an entry, bearish signal. So we have sold 36,400 call at the money. At that time was 36,400. You can check on the charts. And we have sold 36,100 put for 50 rupees. Okay. After selling this, you can like, it is clearly visible on charts. The market was clearly in uptrend after we have taken a bearish triangle. Okay. So at around 2:10 p.m. you can clearly see a spike above the VWAP. So we had to take an exit in the call side, resulting in a 33-point loss, and the put went to zero. In this case, the put went to zero, which is 36,100 went to zero. Okay, and it resulting in a 24-point profit. If you combine these two, here we got a 50-point loss and here we got a 24-point profit. The net loss is 26 points per lot. It comes around the 650 rupees per lot. Yes, I think so. Okay, even though we got butchered on both the sides, both the bullish triangle and bearish triangle, both the triangles failed, still it didn't give us the big loss. That is why I was telling that the directional triangles will give you the good risk to reward. Always the risk will be minimum, and if those two becomes to zero, like if they go to zero, those prices, the reward will be very huge. So I always believe in trading slightly directional. I hope this second example is clear. And let us go to the third example. There was a beautiful thing to spot on this day. You can see there is no bullish breakout on this day, not an issue. We have taken a bearish entry or bearish triangle, but the problem is, even though we have taken a bearish triangle, the market had fallen around 900 to 1000 points, if I'm not wrong, if I remember correctly, 900, almost 900 plus points it has fallen after we have taken a bearish triangle. Triangles are usually non-directional components of option selling. So they can, though, see, we have taken a bearish triangle, it can compensate for certain delta move, not 900, 1000, 1200 points, so it cannot sustain. Okay, now let us see how our bearish triangle has sustained on these kind of days, this like crazy markets. See, there is no bullish signal, as we have already discussed. The bearish signal came at around 12:10 p.m. See, the 12:10 p.m. So we have chosen 35,100 call and 34,900 put. Now please see the width of this triangle. 35,100 and 34,900. It is 200 point width. The 200 point wide triangle has to compensate for the 900 point fall. Now let us see how that how this triangle has managed. See, at 1:45 p.m. the price went above VWAP. Here you can see the 1:45 p.m. And if you see the spot price at 145 is around this time, because I know I have traded this. It is around 34,400. If you can see 34,400. If you can see, our put strike is 34,900, which is almost 400 points in the money. Nearly 400 points in the money. Even though our strike went 400 points in the money, the entire net strategy resulted in 70-point profit. How did it happen? Because our call leg is having more delta, and being slightly directional helped us. These 241 points went to zero. You can clearly see in this chart, these 241 points went to zero, and this 79 points spiked to around 240 points. Even though there was a huge spike on put sides, we were able to come out in profit, net profit in the strategy, just because we took a directional trade. Just assume taking a neutral triangle somewhere here, you would have ended up in loss. That is the reason I always prefer going slightly directional in all my strategies. Almost all my strategies will have that like extra masala of going slightly directional. By this, like almost the strategy part is completed. Now comes the most important part, which is coding and deploying it on the AWS server. Because of time constraint, we might not able to, we will not be able to show you the coding part, because which is vast in itself. My friend Ashish is available with us here. Like he will be telling you how we once the code is developed, how we develop it, deploy it on AWS cloud and automate it. Like I'll be handing out to Ashish now. Ashish.
Yeah, thanks, Sada.
Yes.
I'm audible, right?
Yes, you're audible.
Okay. Can you give me access to share the screen?
Admins, can they give the access to share the screen? Because I'm stopping my sharing.
You can try now.
Yeah.
Yes, sir.
Let me know if you are able to see.
We are able to see this.
Okay, yeah, thank you. So I'll quickly go through the automation part in AWS, and probably we'll stop for questions in another 10 minutes. So you can use any cloud, whether it be AWS, Azure, or Google, whatever it is. So right now I'm mainly focusing on AWS only. So create an account in AWS. So I'm assuming that you have just deploy right now, you are manually running that in your machine. And that too, currently I'll talk on the Python code. You can use any language, whichever is comfortable with you. So just create an account with AWS. Make sure you select Mumbai as your region. So closer to BSC, the latency would be lesser. So try getting a system allocated to your near to Mumbai itself. Okay, so and then I don't know how many of you know this. EC2 is like a virtual desktop, virtual Windows machine or a Linux machine, which you can deploy it on cloud, and you just have to pay as per your usage. So uh, now once you get into EC2, so I have my instance running here. What you can do is you can always launch an instance from here. Okay, so for first 1 year, the basic configuration is free for you. And uh, I mean, we have like 3 to 4 strategies running in just 1 GB of memory, and it's working fine so far. It's been almost more than a year now for me. And uh, after that, you have to pay only as you use. I mean, as much as you use. Now, you don't want this machine to be running 24/7, because you will have to pay 24 the cost for 24/7. So what we have done is, see, okay, now I'll start with the basic how you initiate an EC2 instance. Just come here, whatever language your operating system you are comfortable with, Linux, maybe be it Linux, so I'll go with the Microsoft Windows 22 base version. This we are eligible. So that means you can use it freely for 1 year without any payment. If you are going for some security or some kind of additional keys and all, you will have to pay around 40 or 50 rupees per month. That's it. Apart from that, if no security features are required for you, you can always go with the free tier, 64-bit, and you can select it. Now there are couple of options over here. Don't I mean, just leave them as it is. But the major part over here is the tags. Okay, so it's okay. So in your instance, I have given two tags over here: auto on and off. Okay, this is for me to start my machine automatically at 9 o'clock, 9 a.m. every day, and shut it down by 3:30. Now, how I do that? It's through a Lambda service. Lambda is a code which it's serverless. You don't require a server for this to execute. So Lambda is, I mean, you can Google it. You'll get the code, ready-made codes. Uh, some sort of Okay, so I have my Lambda codes are there, start and stop. What it does is it just picks up the EC2 instances with that tag enabled in them. So it's just a code with auto on tag. So it just picks it up, and I have scheduled it to run every day at 9 a.m. It's a cron job. So it's basically in GMT. So all these things are GMT. So you can, I mean, when you want to convert it into IST, so it's 3:30 a.m. morning GMT is 9 a.m. IST. So Monday to Friday, start this code every day at 9 a.m. Monday to Friday. Okay, so what it does is it will automatically start my machine. So similarly at 3:30, it's 3:30 would be like 10 a.m. GMT. Late. Okay, so I hope that is clear. So next part is the in situ instance, which you have. This is my Windows machine. Okay, this is my Windows machine, which I have deployed for the automated part. You will have to install Python over here, and then using the Windows task scheduler. See, I have my code scheduled to run every day at 9:15. This is just a Python code which will start exactly at 9:15 every day. And the code is anyways handled, I mean, it will handle everything, all the automation or the um, uh, messages or everything is done via Telegram, and this will automatically stop at 3:15 and the machine will shut down by 3:30. So the benefit of doing that is you have to pay only for the 6.5 hours which you are going to use this machine every day from Monday to Friday. Just 6.5 hours payment after the first year of free usage. So it will come around 300, 350 to 400 rupees every month. That's all you have to pay for automating your strategy on cloud. No, this remains same for Azure as well as Google as well. Google Cloud also, it's the same thing. You can always deploy a normal Windows machine, automate it to start and stop at a particular time. And then once you have the instances up and running, uh, go inside the instance, schedule your program to run at a particular time using your Windows task scheduler, or in Linux you can use your cron jobs to schedule the Python jobs to run, and you only have to pay for whatever you use. I hope this is clear. It's not tough. The auto starting and the shutting down of the machine, the Lambda code, you can Google it. It's available everywhere. Just have to create two Lambda services, schedule that to run at 9 a.m. and 3:30 p.m. It will automatically start your instance. It will automatically stop your instance. This is a basic T2 micro version which I'm using. The tags will take care of controlling them via Lambda function, and so you will have to schedule your Lambda, you will have to schedule your program within the EC2 instance. Yeah, that's it from my side. Any questions?
Thank you, Ashish. That is the that is how we, once the code is ready, after the once the rules are ready, and I'll be giving all the rules to Ashish. Once once he starts coding it, once the code is ready, that is how we deploy it on the AWS server. The server, it automatically starts at 9 p.m. and the algo will start at 9:15. It will automatically log into our broker terminals, everything, and it will start running. Only if we have any issues, it will send issues or any alerts, it will be sending it to our Telegram. And if there is any alert message comes to our Telegram, then only we will open and see that. Else, after testing it through all the scenarios, we are pretty much like it will be running and we just need to monitor. That's it. And now I'm happy to take any questions in the strategy part or the code part. Ashish and myself are here for another 10 minutes. If anyone is having any doubts in the strategy part or coding part, you can ask. I'm just opening the question and answer panel. Time frame, Venkatesan is asking about the time frame. Brother, see, currently we are working on 30-minute open range breakout and 15-minute higher high, higher lows. And Vishwa here, backtesting results for long. Vishwa, my Twitter handle is Python Trader at 999. You can ping me there. Currently, I'm not having that Excel. I'll share it with you. Not a problem. Next, Madhu, how do we get the chart for full triangle with VWAP? You can use the iCharts. iCharts, for that, there is a small amount you have to pay for the iCharts. Monthly subscription is there. It is very less. not a problem. You can go and you can have it, or else you first you just go to YouTube and you just type how to get this triangle chart with VWAP on iCharts. You will get the details. Once you are happy with that, you can go and subscribe to their monthly subscriptions. How is the data feed gets into Python via AWS? Ashish, I think it's a technical question. I hope.
It's through the API, broker APIs only. I mean, you will have the data APIs. We use Siroda, Alice Blue, IFL. All the brokers have their own APIs. So there is no restrictions on API coming to AWS. The data feed, so you can get it anytime in AWS. Only thing is that AWS is blocked from NSE. So if you are doing any sort of web scraping or getting data from NSE, that will not happen.
Okay. Coming to the next one, please show a small demo code running. I think Ashish has already done it while showing the how to use AWS. There is in the background, you can see the code is running. You cannot see the code because code is deployed in the remote machine. We'll just schedule the code. That's it. That will be running in the background. Please share the slides. I have no objection. I will share the PPT with the Quants League team. They can hand it over to you. How you offer services to individual traders? See, individual traders we were offering, but currently we have stopped it. If there is anything of that sort, I'll announce it on Twitter. Like we will take like if you have a strategy, we can develop it and give it to you. And most importantly, we are giving the code also to the individuals for them to study. Currently, the phase 1 is already over. The phase 2 I will be announcing shortly on the Twitter. You can just what is the ROI of the strategy shown, brother? See, all the systems which I have will have the backtested ROI of more than 4%. Backtested ROI before cost. I am a very conservative and risk-averse trader. So, like I am pretty much happy with anything around 3% per month on my entire capital, not on the deployed capital. I am talking about the entire capital. More information in the slides. If you want more information, you can always ping me on Twitter. I'm happily available on weekends. I'm completely available. Weekdays also I'll answer in the during I mean after 8 p.m. I'll be yeah capital needed. Sorry, I forgot to mention this point. See, to trade one bullish triangle and one bullish straddle, you will be requiring around 2.8. So 3 lakh is what your broker is asking. So at least put 1 more lakh buffer. So 4 lakhs for one set. I call it a set. One bullish triangle and one bearish triangle is called one set. I allocate 4 lakhs for one set. Okay, and see, you can always trade the variations of this. As I told you, one entry comes from 30 minutes open range breakout, one entry comes from 15-minute open range breakout, one entry comes from 15-minute price action. There are 3 entries, so I need to trade 3 sets. So I need to have 3 into 4, 12 lakhs in my account. Though your brokerage will ask you only around 10 lakh for that, you need to have minimum, like it is good to maintain some buffer cash to handle during the drawdowns, because strategy is only 30%. Your money management and risk management part is the topmost priority, which you have not covered due to the time. I want to deploy and Nifty Bank Nifty. It's a very good idea, Mr. Siddhan Gaudji. The another variation is just now I told you that 30-minute open range, 15-minute open range, and 15-minute price action. There are 3 entries, and the same 3 entries, if you do it on Nifty, it is completely 6 entries. That itself has become a complete system. You don't need any other system to trade. Like, see, you will be trading 6 straddles. It will require around like 20 lakh capital hoga to bhi kafi nahi yaar. That itself is a complete system. You don't need to go to any other person to ask for their systems. Try building something. Try to diversify it. There are 2 kinds of diversification which I follow. One is time diversification, like 15-minute time frame, 30-minute time frame. Those are 2 diversification. Second thing is script diversification, Nifty and Bank Nifty. If you see, there are 3 variations. I can do it in Bank Nifty, 3 variations in Nifty, total 6 variations, and each variation will cost me around like 4 lakh rupees for one set. 6 4 24 lakhs. You still, your capital is more than 24 lakhs. You need not worry about anything else other than this. You can happily trade this till your capital is 24 lakhs. How much you will be charged for 1 year of AWS? Of 1 year it is free. After that, as Ashish already told, it will charge you around 400, max to max 500 rupees per month. How do you adjust to high volatility and V-shaped recoveries? This strategy is inbuilt for the high volatility and V-shaped recovery. If you have listened carefully, going a bit of directional will give you that edge during volatility and V-shaped recoveries. We have already seen on one particular day, a 200-point wide strangle has handled 900-point move and came out in profit. What else do you want? I've clearly shared the example also. I'll be sharing the PPT. You can go through it multiple times. Not an issue. Which broker do you use and how much do you pay for the API? I use Alice Blue API mostly, which is free, and I use Zerodha for few APIs. It is chargeable. You can Google the charges. What is the win rate of the strategy? Win rate is like, brother, see, all the option strategies come with a 60% default win rate. If your strategy is basic, like stick to rules, you will get 60% win rate. If you can do any more tweaks to the strategy using your like good knowledge, you can get more than 60%. And win rate is not the one which I usually consider during backtest. I'm only bothered with the drawdown and the drawdown, time drawdown, and maximum loss for the day. These three things I usually see. How is the quality data from Zerodha versus true data? Ashish, if you're here still, can you answer this?
I can't comment on that, Siddharth.
Cannot comment on that. Sorry, friends. Will Ashish share the code for charges? See, we are not sharing our code for the charges, but if you have a code, we are building it. The phase 1 of that program is completed. Phase 2, we will be announcing in couple of maybe 1 or 2 months. Then you can approach us. Can you share the code? Our codes we are not sharing, brother. If you have a strategy, as I well explained, we can code it for you. How can we contact Ashish? You can ping me on Twitter. Ashish is he's not into social media things and all. You can contact him through me. Does broker provide indicator API as well? Yes, you can. You should code it. There is no indicator API as such. He will give you, the broker will give you the data through which you need to calculate. All the indicators are mathematical values. So you can calculate all the indicators using the mathematical formulas. How to get the code? I am a broker for my clients. Charges for each strategy. Charges depends upon the complexity of your strategy. You can ping me on Twitter. We can discuss that. How to contact you? You can contact me on Twitter. My Twitter handle is PythonTrader999. PythonTrader999. I'm just repeating it. Twitter ID PythonTrader999. Hi team, my message box is visible. Please enable it. That's it, friends. The time which is given by Quants League is up. So if you are having any queries, you can ping me at PythonTrader999 on Twitter. I'm happy to answer all your questions. And thank you, Quants League team.